2020, guys, what a year to reflect on. Actually, I've become even more acutely aware that a year, even a few months, can be a good enough time for crazy things to happen. So in this video, we will look at 5 things that commentators have highlighted, which could be crazy happenings for 2021. So grab that crystal ball and let's get into it. The first one, tech scrutiny and split ups, guys. It's the year of breakups. So 2020 has been a massive year for tech giants. As I started my channel, I remember making videos on the FANGs and Apple hitting that 2 trillion mark. The impact of the lockdown and the subsequent lockdowns have put a lot of industries under stress and killed some old giants too. However, tech giants have thrived throughout 2020. So market share for the big tech has made huge gains. So already in 2020, we saw antitrust actions starting against Google and Facebook, and likely Apple and Amazon will most likely follow. Not gonna lie. Now, as you may also remember from my Jeff Bezos obsession video, Jeff is one of the most smartest business leaders in the world. I know some of you will say that that's debatable, but by the by, I have an obsession with him. There is some discussion around breaking up Amazon on his terms rather than opponents deciding the company's fate. And it would make natural sense to split Amazon into retail, cloud business services, and even entertainment streaming. And there is talk on the horizon that Bezos could structure it in such a way that Bezos himself retains control of the Amazon group and the 3 babies in this example, but eliminates regulators needing to attack Amazon for now. Guys, this is a juicy one, not gonna lie. Mercedes and BMW are gonna merge. Or are they? This is an interesting one I picked up, but both of these car manufacturers were showing some signs even of struggle even before the COVID-19 pandemic hit and ravaged new car sales. Again, picking up the trend in our personal finance community, we love EV cars, and makers such as Tesla have been roaring ahead. Tesla now has a market value of greater than BMW and Mercedes combined, guys, and that is insane. As hard as BMW and Mercedes try, the gap is now just too large, and the evolution is way too far gone in terms of innovation. And what did Schumpeter say about innovation? Innovate or die, guys. The possibility of the 2 firms combining using the inherent brand value that they have between them, and then being able to invest in new technology, driverless and battery powered vehicles, is the most likely way to catch up and stop bleeding out, as they say. But what band camp are you? Are you Mercedes or BM? Which one? The third big shock will be Bitcoin becomes a fiat currency. Say what? Fiat is Latin for let it be done, right? And is attached to government issued currency, which is considered legal tender. Now, one of the most controversial news items for 2021 surrounds the Swiss franc. The Swiss franc has been one of the oldest and most stable currencies in the world, but for a decade now, it's also had a bit of a problem. And that is, it's considered overvalued and crushed Swiss competitiveness. Nothing the Swiss central bank has done has been able to bring the franc under control, and the US Treasury has labeled Switzerland as a currency manipulator. Now, the simple solution would be to ditch the franc and adopt the euro. Never ever going to happen, but let's not open that can of worms here. But the second why Switzerland could be the first currency in the world to adopt or peg against Bitcoin is simply because Switzerland was already one of the first countries in the world to give Bitcoin legal status. Now, if they make it an official currency alongside the franc, then many of its problems would just disappear, literally melt away. There is more out there, guys, but when argued like this, it kind of made sense. Right, the next thing I want to talk about is gig workers. And gig workers will become official. So I think this has been coming for some time. As a previous restaurant owner, I love the flexibility of building a team when you needed it, literally at the tip of your fingertips, in using both my own pool of staff and staff pools from agencies. Say you have a big night of bookings, no problem, call the emergency gig staff agencies to send some people over. Bank holidays and hot weather and some of your courier riders don't show up, no problem, pay up through outsourced gig agencies and build your team for the night. The flexibility even was insane and allowed me to compete like bigger businesses even. Now, gig employment, 0 hours, has been growing at a rapid pace. Accommodation accommodation, delivery drivers, taxis, food delivery, they're all built around gig workers. And with this rapid rise, there is a government responsibility to legislate and even protect those citizens on both sides, but particularly those that are employed in the gig economy. Trying to fit all workers around that 20th century law, working practices and tax considerations, I don't think that will work for much longer. And with COVID-19 forcing even more businesses to become digital, I think we should expect governments to create a legal category for gig workers with some rights and responsibilities of traditional workers, but retaining that flexibility and fluidity. I think it's likely to be a first move category, with one country developing it and then other global economies will probably replicate it. Right, the final thing I want to talk about is the FTSE hits 10,000. I really hope this does happen actually. The FTSE ended 2020 at around 6,400, and that is an achievement in itself despite everything that's happened, as the country faces one of the worst outbreaks of COVID-19. I mean, we were the home of the new variant and breaking away from the EU and its main trading partner. It's a miracle it's finished where it has actually, and the index now sits at a 1999 high. It's just madness. I just want to talk about the 3 catalysts that can change that. So firstly, Brexit is now out of the way, so much so, kinda. And with that gone, a lot of pessimism around the UK will start to evaporate as investing in the UK becomes more predictable, which is a pro. Secondly, UK services and leisure have been hit hard by the pandemic, but that also means a snapback is likely to be faster, as is typical of historical recovery patterns. And then you have to remember the UK economy is dominated by oil, banking and pharma, not that sexy tech stuff that our neighbours have, and these industries do have a delayed beta to tech firms. Also, some of these industries, particularly pharma, look like they could be sexy again. It's a matter of investor sentiment changing, and with the UK underperforming globally for 2 decades, guys, both a positive trajectory and shooting up quickly can happen. Maybe a 54% increase in a year seems a little bit fanciful, but a sustained period of growth does seem reasonable. Here are a bunch of videos which link nicely with this video. Do enjoy and see you